Okay guys, so today we're going to do an exercise session, third range boundary plotting and random questions from the users, 1 hour long at best, and this one will be available for the first time as a replay. Let me explain you how these things works. You basically will have 7 days to look for this, and when the next session comes in, so 1 week from now, we're going to record another replay, which is going to replace the previous one. So it's basically, I don't want to pile up videos into the YouTube channel. So for those who just can't make it for the live sessions, you'll be able to replay for 7 days until I replace with the next one. All right, so that's how it's going to be. Anyway, if you can make it live, that's of course much better because you can ask your questions. Otherwise, you can either private message or any such a thing if you have other concerns but can't make it live. Okay, so let's get it started. Users just gave me random 2 letters ZC, which we're going to put in here and try to catch up an available market to study. Oh yes, that is going to be great for third range boundaries. Quite of a range. Okay, we're going to forget about this candle in here. Let's just focus on the fact that it might never have happened, and let's call it that way. Okay, we don't really have that much history, so we're going to go 4-hour chart. Ah, damn it, not enough liquidity. Okay, I'm going to go for another thing. ZC of fun. Okay, even less liquid. Let's see. Jesus, we're going to find something suitable. The sound's gone. Normally, okay. ZC, come on. Oh, you gotta be kidding me. Okay, give me another set of letters. Oh, come on. N-O. Oh. I'm gonna go for this. Nokia, yeah, it's been a while. Okay, hell of a rough path because of Robinhood traders. Still, we're going to look for a trend. That's what we need. Oh man, it's really hell of a long range. Just can't figure out a goddamn trend. Isn't going to be that complicated. I just can't bear it. Okay, something else. Jesus. NH. Come on, give me a stocks that trends. Okay, we're going to go lower time frame charts eventually. Okay, here we've got a nice bear trend. Okay, so remember the example? What I'm asking you guys to do is to basically use multiple colors of dots. Okay, and possibly do the exercise in multiple steps. The first one being, okay, so blue dots are for buying third range boundary, red for selling ones. We've got the dark gray or black for those who are totally squeezed, and the green one for those you have replaced because of indicator delay. Someone's just having background noise. I just don't know who that is. Okay, sounds good now. So the exercise level 1 is basically doing this only in the context and just trying to make sure that you do not trade into the higher time frame range. Okay, I'm going to give you guys an update about that, but otherwise the simplest possible way to do this is to work around the third range boundary plotting on the trend channel. Okay, and make sure that you haven't reversed the higher time frame range. So let's consider that the trend has emerged in here. This is where we've got the breakout, which means as it started, we can pull out some third range boundaries. So let's try doing the example in here with the trend channel. I know it's not going to be really easy for you guys, but try to do it that way. It's really, really more convenient. Doesn't sound like it is, but it actually is. So look at the trend channel. Okay, you have market breaking down, reversing the context. So there is obviously a third range boundary. Are you guys agreed with that? So the fact is, as we've gone down and reversed the context, though the trend channel in here, there is a third range boundary. If the market went there, we would have had it. But still, we do it later. But that means we have a third range boundary in here, right? If any of you guys have a microphone, you can turn it on. Feel free to speak. It's no big deal. Otherwise, a simple yes or okay. Just let me know you guys are live. Okay, come on guys, just participate a bit. It's no big deal. I mean, no one's gonna blame you for talking. Okay, so there's a third range boundary. Which kind of third range boundary could it be? One of these four. Okay, anyone else? Red? No, can't be red. The third range boundaries are always going to be on the opposite side of the trend. Remember, they are not counter trend trades, they're just neutralization of ongoing trends. So in here, in this precise example, this one is not even an option. Okay, so it's more like you've got three options, this one, or this one. Okay, the black one isn't because of Fibonacci's. The black one is the squeezed one. When you basically just go straight line, you were supposed to get a third range boundary, you simply don't get it, and you break to new highs, or new lows in our specific case. Okay, we're all agreed on this one? If you're not, then tell me, okay? No big deal. Making mistakes with third range boundary plottage is definitely part of the job. You're going to have to do it a long time, multiple times in a row until you make it without making any mistakes. So, oh, and by the way, if you have already existing exercises of third range boundaries you want me to have a look at and make corrections out of, then we can definitely consider doing it in here as well, okay? This kind of exercise, you should do it on your own. The goal is to first do it with the charts fully plotted in front of you guys, and then secondly, when you fully master this and you do it well, you start doing it as a replay, which means you have no future telling stories, you just basically play bar after bar. Red equal trend channel. No, the red is basically for selling third range boundaries. The third range boundaries out of bull trends. Remember, bullish trends, we look for third range boundaries on the opposite direction. Bear trends, like we have one here, we look for buying third range boundaries. Okay, so it's basically, these are for buying opportunities, these are for selling opportunities, these are either for buying or sellings that have been just squeezed, and this is the ones you've replaced. You've switched, you scroll back in time to review the numbers. To review the area. We'll find another one of these. Sorry, coffee time. Okay, so in here is definitely a black one. When you don't know where to put it, okay, you've got multiple options. Normally you're supposed to put it where the area would have been targeted. So that would have been in here. Otherwise, if you really don't know where to put it, what's the rule? What's the rule? Okay, if you don't know it, 50%. Okay, you take the highest point, then you take the lowest point, and you basically set the third range boundary level as 50% in between. Okay, it's basically as simple as it is. So it is definitely out there. We can say that the market tried in here to find some support, kind of rebounced a bit, but it really gone straight down to the downside. Okay, so we've got a squeezed third range boundary out there, 50%, as it's hard to plot it. Okay, next. So we make new lows, which means starting all over again. Remember that your eyes should be focused on to the trend channel, okay? Okay, so look at the trend channel. Don't give a fuck about the context. The context in here are just to make sure that we do not yet reverse the context. Otherwise, they will be context third range boundaries. Okay, so new lows, high point, reverse the context in here, right? So there's another third range boundary nearby. Which kind of third range boundary is that? Black again. Okay, sounds like you're getting it. All right, so second time in a row that we're fucking third range boundaries. The market doesn't really want to go bullish at that point. Okay, reach the 1-to-1 ratio though, so this could be first reversal opportunities, but that's a topic for another day. No, there's no cycle breakout. Okay, forget what I just said. All right, so new lows, reversed, yet another third range boundary. Where is it? Is it a blue one, green one? So the red ones are not yet possible, of course. These ones are for bullish trends. So we've got these, this, and the black one options. All right, blue one for everyone. Sounds legitimate to me. Okay, so this is a blue one. All right. You don't necessarily have to put it right at the bottom, okay? Put it into the area in which you would have traded it. You've got the fibs, you've got the rising context. This is where you would have bought. Okay, sometimes the market goes below. It's no big deal. But as long as you do not make new lows and you don't take your stop loss, and you're still in a trade. We're not going to buy at the lowest possible prices every time. Okay, so this one shuffled the deck a little bit, bit of chaos, and bang, big nice upside gap to recover from the level. And what have we just done in here? No, 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 no. Reverse the context, exactly. So when you reverse the context, what's happened? And how does that change the mood? How does that change what we're doing? Yes, that's a second range boundary, but the thing we need to notice in here is that as we reverse the context, we can no longer trade with the trend channel's third range boundaries. The trend channel is no longer a thing, because now the thing is the context. Okay, you get that? That's the reason why doing it on the trend channel is better for you guys, because you can immediately see, whoa, if the third range boundaries are on the trend channel's reference time frame or on the context, because you already see what's happening in the bigger picture. Looking at the trend channel, you have your context to tell you whether or not they are third range boundaries. So in here, we know that there's one to come, but it is on the context time frame this time. So remember that the game we do is, as a second level of difficulty, you're going to use bigger dots, okay, which are going to send the message that these dots are for context time frame reference. So you basically do the third range boundary analysis on 2 time frames. That's a little bit of a tougher exercise, but that will help you a lot if you're expecting to get into expert context with me, because this is what we do all the time, studying multi-time frame third range boundary plots to actually figure out what the market is on the verge to do, specifically for counter-trend trades. Okay, divergences, they can be highlighted by the way we work around third range boundaries, reversals as well. And anyway, third range boundaries also matter a lot for trend follow. It's not just about reversal trade. Who's having, okay, sorry, Ochi, I'm just putting you into mute. Okay, so is this also new trading opportunity, a third range boundary? Yes, of course it is, of course. You can trade this one, just like you can still trade the second one. What's actually great with these two is that basically the first one and the second line and the second one are aligned, okay? Which is a good thing. This should start telling you that the market's now willing to buy. No one's selling anymore, and more importantly, third range boundaries are buying and getting deported on the higher time frames, which means some people bought in here and they bought again in here. But the difference between the two is that the third range boundary on the trend channel reference has a shorter time frame schedule, okay? Those who are got into this trade, they secure the trade in here. Those who bought in here might have bought for longer term perspectives because of the higher time frame reference. Are you starting to get to understand these things, how they actually matter a lot? Because I know how boring this can be to start plotting third range boundaries everywhere. Most of these not being tradable because not enough signals or stuff like that. But what really matters a lot with the third range boundary is really how we're going to read what the market has done out of these areas. These are the most crucial areas of ranges that tells us what the smart money is doing. Okay, and these types of patterns will let you know sooner or later that this market is reversing to bull trend, or at least we'll probably try doing such a thing. Okay, so actually this asset gone up later on, reversed the bear trend, but the thing is that, oh man, COVID came in and it has been hell of a 47% drop on prices, but still the asset recovered and has now rallied a bit higher. Okay, let's try doing yet another exercise surrounding, yeah, we're gonna gasp another asset basically, because I think there's no reason, or we're going to try doing it on the 4-hour chart reference, okay, riding that trend. So first things first, okay, because I know that can be a little bit of a trouble, and if this is really a trouble you've been experiencing, just please let me know, even though I know you probably had. What is the things that you're using to call for a bull trend? Because actually, you know how I hate subjective analysis. So when I say you need to have a bull trend, that's something that feels like a lot like easy to me, but I'm not necessarily sure it is for you guys. So do you have any trouble defining the fact that a trend is on? Yes or no? In the same range channel. Oh, okay, I get it. So the thing is that the third range boundary, okay, when you plot it on the chart, okay, so the thing is that as long as you make a new low point on a bear trend, the wave counts restarts. So like for example, this would be wave 1, reversing the context. So there's the third range boundary. That's the one we've highlighted earlier into the higher time frame reference. As long as you do make new low points, okay, I'm not talking about just plotting a lower shadow candle in here. It's really more about you settled a bit of a value out there, so you've made new lows. Means wave 1, do you reverse the context? Yes, so wave 2, so there is another wave 3. Okay, that doesn't mean the first one wasn't there, just means we're building another one. Does that sound better that way? Okay, actually what we're going to be doing for the replay is that I'm going to put your guys' messages somewhere. Jesus, how am I going to do it? It is not going to work. Okay, I'm going to try saying out loud the comments. Invalidated third range boundary to form another one. Yes, but not necessarily. That doesn't have to be an invalidated first one. It's more like as long as you do make new high points for a bull trend or new low points for a bear trend, then you just restart the wave count, which means yet another third range boundary is going to come. But as you just mentioned, okay, the thing is that it is not necessarily because we squeezed this one or stuff like that. We could basically have validated this range boundary and made a new low point later on. That would still be the fact that as long as you make a new low and you reverse the context, there's going to be a third range boundary afterwards if you ever retrace down to the support context. It's really that way, okay? The pattern is real simple. Figure out a trend. Do you guys have any problems figuring out trends? So anyway, I'm going for an update on framework, and I'm going to set the moving average as standard setting, because basically back then you had to settle for this. You had to activate the 20-period moving average, or whichever duration you wanted it to be. But now it's going to be a reference into the indicator. Okay, so everyone will have a settled 20-period moving average on the charts with the default settings. Okay, because we're going to use this moving average. I'm going to introduce it into the strategies reading. Because I think it's really going to help you guys for a trend, okay? So the easiest possible way for you to figure out that there is a trend at play, okay, is when you see this, a falling or rising moving average. It goes the opposite way for the bullish trend, okay? And when your context is settled below, okay? So you've got a descending context below a descending moving average. When you have that, there are normally not enough chances for these things to be ranges. Okay, so I think that's much better for you guys, because with this you don't necessarily have to figure out where the breakout is and stuff like that. Okay, normally if you have a descending moving average and a descending context that is below, then trend might be at play, and in these contexts you can figure out your third range boundaries. Okay, does that sound good enough for you guys? Okay, it's a simplification. So it's definitely not the best possible way to do it, but I think it's convenient enough for you if you are a beginner, as you need to have trends to plot your third range boundaries. Okay, so the question is, as you figured out that point, which is generally the breakout area, okay, breakout is generally the moment the market will do this. Okay, that means you're in a bear trend. As long as you make new low points, keep riding that trend and keep looking for third range boundaries. All right? So, because if you use that, you would say then in here we have both, we still have a falling moving average, but it is inside the context. So in that perspective, there is no longer third range boundaries. No, don't do it that way, okay? The trend has triggered in here and it's just ongoing as long as you make new lows. Okay? Can you guys confirm that you got it? Okay, it's more like this thing is the trigger point to start figuring that the trend is at play. Okay, all right, now, so let's try doing the same thing for the bull side. Okay, so for example, in here, you might be starting to figure out that something is going on, but what's the difference? Okay, why isn't that a breakout? No, you don't know what's going to happen afterwards. Okay, let me just use the replay in here. Okay, so would be, for example, this. Okay, when you're there, okay, let's go a bit further away. Well, yeah, actually, I understand your question, your answer. Yeah, now the fact that we've retraced down there means that this was no breakout. But still, let me just roll back in time. Yeah, no, the moving average was still not there. Okay, so, yeah, you're right. That's a receivable answer. But anyway, the thing in here is that you would see that the moving average is going from bullish to bearish. It's just feels pretty much like the thing is randomly plotted. But anyway, more importantly, to get to a trend, okay, you really need to break a resistance. So in our present example, we really need to go higher than that to settle for a bullish trend. Okay, so I would say in our present example, this is the moment I would say, and we're still, dealing with marginal new high points. This, okay, there we have a trend, okay? So let's start doing the same exercise, okay? Focus your attention on the trend channel and try to help me figure out the third range boundaries. Okay, it's a bit of a choppy activity because we're 4-hour chart reference. Okay, still making new high points. Still making, okay, I think we're going to fuck up the context. Yes, we did. Okay, so, well man, it's gone so fast. I don't even know if we did reverse it, but I think we did. Okay, so new high points in here, it's gone real fast. So, we've got a third range boundary. Where do we put it and which color? Yeah, I'm going to zoom in because, of course, if you don't have, if you're looking at it on your cell phone, it's going to be tricky. So anyway, if you have any trouble, okay, we're looking at the trend channel reference time frame. If you have any troubles, just scroll down to the lower time frame, okay, and you're going to see what happened in the reference time frame, which is the context. Oh, Jesus, fuck, that's a tough bitch. But as you can see, the 50% trend, the 50% context turned red, so there is the third range boundary. It should be there. Okay, this is where we've tried out. There was 61% retracement approximately, not perfectly. Okay, so here is the third range boundary. Which color then? Red or green or black? Okay, the colors mean the black is the squeezed third range boundary. The red is basically a normal standard negative or bearishly orientated third range boundary. Doesn't mean to have a bearish range, okay? It just says you found a bearish third range boundary opportunity. We don't care now about which type of third range boundary it is. Just has to be at least 61% retracement. Okay, and the green ones are the one that we replace afterwards for reasons that we'll probably come across later on. 1-to-1 squeezed. Yes, exactly. Oh, I've put it in here because this is where the third range boundary should have been plotted, okay? Look at the context. So we've got our bullish trend, clear nice evidence in here once again, moving average above the rising context, below the rising context in here, or rising context above the moving average. Feels like more logical that way. So you've got your nice trend. Here you go to reverse the context, which means there is obviously a third range boundary at that point. You just don't know what type of third range boundary is it going to be. Okay, as you put the motion in here, you would figure out that you barely have your 61% retracement. Has to be a little bit, what the freaking fuck? What the hell with the Fibonacci's? Oh gosh, there's something odd. Wow, wow, wow. Okay, the fibs are really not well plotted. Jesus, I don't know what the hell has gone wrong. Oh, something's really wrong. Okay, anyway, we're going to use manually plotted ones. Okay, 61% is in here, so we barely reached it out, okay? So in here, at that point, you would put it red, okay? Live, you would put it red in here. And then, okay, you see that the market hasn't even validated it and totally fucked it all up. So at that point, you've made new high points, you've reached that 1-to-1 ratio, squeezed third range boundary. Okay? Green is the lagging indicator. We'll see a couple examples, hopefully later down the road. What confirms the squeeze of a third range boundary? Is it only once it makes new high? Yes, squeezed third range boundary has to make new high point on a bull trend, new low point on a bear trend. Okay, and has to reach out a 1-to-1 ratio over the breakout level. So this is where you should have had the thing. Okay, you make new high points and you need to see on a 1-to-1 ratio. If you don't see this 1-to-1 ratio, it's no big deal. Like I said, if you don't figure out the broken level, just put the third range boundary in the 50% level. In here we can see that it should have been there. Prices reacted for a bit before being broken up. Basically what that means is that you would never have sold this third range boundary, no signals and all of those things, but it still matters a lot that you guys highlight this level. Like I said, the third range boundary, Jesus, I got some weird noises. Fuck it. Feels like an animal. Man, don't tell me there's an animal in my house. Jesus. Feels like a mouse or something. God damn it. Jesus. No, it's not the cat. That would be way too easy. It's a lazy cat. It wouldn't do anything. Okay, anyway. Weird stuff, but I'll figure it out later. Okay, so third range boundary black. Is that okay for everyone? We move to the next one. So we have other examples. Okay. So new highs means that if we reverse the context again. Oh, I think it's one of you guys. That's just putting some noises. You scared me the fuck out of here. Okay, there's no mouth into my house. Okay, so not yet. Okay, here we're broken down. So, oh, what do we do? Oh, sorry, we should have gone back to the higher time frame. Okay, so that was a trend channel 1. Okay, so trend channel newly reversed yet again. Okay, third range boundary again. This one we're going to put it to red, at least for now, and see what's coming up. Okay, this one's fucked again. 1-to-1 ratio, black. Okay, sounds like this market really doesn't want to go down. Okay, reversed once again. Okay, and this time we've reversed the context. Okay, so now we're going to get a third range boundary in the context. Okay, let me tell you that, oh, we're nearly real time now, but let me tell you something. This market is definitely going to trade 480, and it's probably going to be short sold. We'll see. And yeah, it's real time now. Okay, so this market is now going to retrace the previously tested third range boundary level, very likely going to reject that level. Okay, yes, so we're done. Let's figure out another example, and hopefully we'll get a green level. Give me another set of 2 letters. Let me just change my settings. This is basically why you guys... Yes, that's it. Okay. Sorry about that. It's just that you basically, guys... Your volume, the output volume of Discord was set on the TV. That's the reason why it sounded real odd. And the noise coming out of irregular sources. Okay. GSPH. Okay, first one first. PH. Okay. Right. Nice trend. Okay, we're gonna have work to do out there. Very nice trend. Let's start with this one. Okay. So clear and nice trend. I think the trend would be settled in here. So let's start doing the same exercise in here with the trend channel as a reference. Okay, so something happened in here, but do we do a third range boundary out of this? Yes, no, and why not? Okay, not enough volatility means that, yeah, you can say this level matters, okay? You can put a random level out there. Still, there is something that will happen out there. But if you stop plotting third range boundaries in a nice trend, okay, that just broken up. So in here, all you're just getting is the confirmation that the trend is going on. Okay, so no third range boundary into these low volatile clusters. Okay, we wait for the market to breathe in sufficient enough. Okay, in here, reversed. Okay, third range boundary, where would you put it? This one is impressive. Where would you put it? Let me just use that. Okay, one. Would you put it there, there, or there? You're going to vote. No, 1 second, 1 second. I'm going to use with the reactions. Come on. Where's the 1, 2, 3? I don't remember where that is. No. What's the number 1? Oh, okay. It's 1, 2, yeah, and 3. Okay. All right. I think we're going to go for the 4-hour reference in here, actually. Oh, no. Okay, let's go back. I'm going to use replay. Okay. All right. So, we've got a very interesting case scenario in here. So, let me put it back again. 1, oh, come on. 1, 2, 3. So you guys still using your previous votes? For the replay, it's mostly 2 at that moment. Okay, no one's changing the votes. Okay. So, the thing is that in here, there are multiple answers. I would accept 1 and 2. 1 because we've gone to 61% Fibonacci retracement, just gone real close to the resistant context. I would accept if you don't consider this one valid. I would personally still count it as being such a thing. So I would say we've got 1 in here, but this one would be a red, okay? So why would it be 2 acceptable third range boundaries in here? Because that's one case in which you can have 2 third range boundaries, just 2 different ones. The first one would be the bear range, okay, in which the market has the dip below the previous low points and so on, which is something that didn't happen out there. But still, when we were back then, I would have said this is totally a bearish third range boundary. We've broken the previous low point. We didn't manage to hold the candle close. But still, I would say, why not? We've just gone real close to the context, not necessarily right in it. Okay. But this is the specific case scenario in which you have a first pretty much 90% valid bearish third range boundary. Okay. Then you validate, you confirm the third range boundary. Okay, remember that for a bearish range, the confirmation is reaching the opposite context. So in here, I would definitely say that there was a third range boundary and there was a fourth. It's just that in this case, this one is also acceptable as well, but this one is a neutral third range boundary. You're still following me, right? If you do not, let me know. Okay, this is the only cases in which, without making new highs, though resetting the wave count, you're going to be able to highlight two third range boundaries. Okay, the first one would have been tradable because we had the bear signal. Okay, the second one would have been tradable as well because neutral signal, Fibonacci 76%, closes on top of the context, everything was good for both of these third range boundaries. Is this the 1-1 trend channel? No. There's no 1-to-1. Okay, big problem. You shouldn't do such a mistake, Splody. Why isn't there a third range boundary in here? There is no such a thing. You're inside the high time frame range, and anyway, it needs to be making new high points until then. So there's really nothing speculative out of this level. It's purely and simply the mid area of a range. This is for dumb traders to trade. Okay, so in our example, we can set the two range boundaries because they are different types. Okay, there cannot be two third range boundaries in a range unless this specific case, in which you have a negative bearish third range boundary followed later on by a neutral one. Of course, when the neutral third range boundary showed up, there's no way you can put another one afterwards. Okay, it's more like you have a more precise, more aggressive version of it, the bearish third range boundary, and sometimes you'll get a bearish third range boundary followed by a normal one, a neutral one. Okay, so in that perspective, if you told me this one was a third range boundary, I totally agree. Now, if you tell me this one is another third range boundary, I would agree as well. The question is, you could have traded both of these. Normally, if you trade this one, you would have been validated in here, confirmed in here, which means your stops were that break even and you weren't able to lose any money. You would have been taken off the market and totally able to trade it again as a neutral third range boundary. So now that you understood the process, which one of the two do we keep as historical reference of money management into this market? The first one or the second one? Okay, we always keep the freshest level. The latest one is this one, so this one is still a valid one. If you put it on the chart, I would say totally yes, and I would actually like you guys to figure this one out. But this one is the one we care about, okay? If we want to let the horizontal level for further usage, this is how out of this level that we do it. All right, so let's go back to our reference time frame, daily chart. Okay, so in our case, there were two, and we're just going to delete this one. Even though it existed, this is the one we trade now. Okay. Okay, so what is this? Is this a new market top? Yeah, no, it isn't. Not enough. I mean, this was the market top, okay? This was the previous market top level. Just look at it. It's basically not even holding any candle close out there. So it's really just double top. These are rare structures though, but still they happen. So this is not a new market top. This is just basically another range boundary. So in my personal opinion, this range would be this. 1, 2, 3, 3. Okay, like two third range boundaries in a row. 4. End of story. Or you would do 1, 2, 3, 4, 5, 6. I would agree with that as well. That depends on whether or not you consider this one as being validated. I think it gone real close to the support context. Though in that perspective, I would say, okay. Yeah, any question? If anything sounds subjective to you guys, you let me know, okay? I would accept both of these wave counts anyway. It's, to me, it really feels like when there is room for subjective analysis, let's go for the easiest ones. I would do it that way. Okay, so this is really an unconventional type of range. Totally flat bullshit, okay? Double top, double bottom, flat range. Rarely happens, this one, okay? But still, the third range boundary, I would actually have agreed you guys to put it into number 3 as well in here, saying that the market gone right up to this. It wouldn't have invalidated you out of this trade, and you would have been profit taken out there. So if you put the third range boundary in here, I would agree with that. So let me understand this thing. It's really absolutely staggering level. So first acceptable bearish third range boundary was in here. The second one as a neutral one happened right after. This one would have been green because of the fact that this is where you would have put it, and you would have switched it later on into this. So this was acceptable on its own, okay? This was acceptable if you've seen the previous one. This was acceptable okay, if you deleted the first two ones and said that this one have basically been just shifted a bit later on. Okay, so anyway, in here, they're all plotted around the same level, okay? But I would actually accept all of these, okay? But the final one, if you do it that way, has to be a green one. The one that you've replaced from this area to this one. Okay? But you would never have traded this one. You would have traded this one. So this is the level that matters. This is where the professionals traded. Okay. So next, new high points. So the next time we reverse this trend channel, is going to be, whoa. Okay, so here's a quick reversal. All right, what have we just done? Reverse the context. Great. If you see it, that's really important. So we forget about looking for the trend channel now. We're just looking at the context. Not enough. Okay, here we go. So this one is a context reference time frame. For now, we're gonna set it to this. All right. Validated, confirmed, and target reached. Okay. It goes back again. Okay, so at that point, remember to wave count the majority of the range. 1, 2, 3, 4. We're 5 now, okay? And we're tasting the third mid-range boundary again. And, oh, whoa. You don't have seen it, but I did. We have reversed the higher time frame context as well, or at least looks like it. Let me just see if we did. No, we didn't. Look at the 50% context, still blue. So, still bullish. Okay, so fifth range boundary, trying to test. Yeah, that was a bearish third range boundary. Come on. Switch. Okay, so fifth wave, trying to break the third range boundary now. Failed. 6 third range boundary. 1, 2, 3, 4, 5, 6. Okay, still counting. and a 7th and 8th. Oh man, that's hell of a fucking range. It's getting over mature. Let me just highlight the numbers again. So 1, 2, 3, 4, 5, 6, 7, 8, 9. It's really getting freakingly mature. So at that point, I hope you're not even trading this time frame. You're really gonna have to look at the higher one. Okay. Anyway, let's keep it going. Come on. Are we going to break? Yes. Breakout target, breaking out of the range, breaking the third range boundary. Trend might be on the verge to reactivate. But of course, oh, I know what's going to happen out of March. COVID. So it's going to fuck up this thing. Whoa, yeah. It was really goodly settled. I mean, this thing would very likely go higher. But, oh, fuck, COVID. All right. Still, nice recovery. Like I said, prices went up. Those who took it without panic made some gain. Oh man, the guys who have bought 200 have gone right down to 100 right after COVID. So it's really have been hard hitting. Okay, anyway, so trends back in. At that point, we break new highs. So yeah, there's a third range boundary in here. Have you seen it? Have you seen it? Okay, perfect. So, third range boundary out there. All right. Oh, and we're real time, so there's nothing else we can do. How much? 52 minutes. Okay, let's do another one. Random 2 letters, please. Now, this one really got validated. I think it didn't really confirm. All right, let's go to the lower time frame to figure it out. Yeah, it validated. So, okay, when the third range boundary is validated, this is just that we've made a third range boundary, it validated and got broken up. So it is a broken third range boundary. The squeezed one is really like you get there and the market doesn't give a fuck. Okay, this is just broken third range boundary. All right, go ahead with your question and give me 2 letters. Okay, GT. I haven't seen it before. Goodyear. You put the third range boundary halfway without touching any trend channel. Okay, oh, whoa, whoa, whoa. No. It's important that we pull this one out. You put the third range boundary half away without touching any trend channel. Is it possible? I don't get it. Say it again, change the words to make sure we understand each other. To touch what? The trend channel. No. Okay, remember one thing. The trend channel is just a representation of the lower time frame context. The contexts are not a single line. The context never will be such a thing. The contexts are always an area because there is a margin for error. Okay, consider that this line that you see here is a line that would be there. If my memory is right, and I think it is, I'm adding a 5% margin for error above the level and 15 below. Okay, so the trend channel you have in here would have its line represented in here, 5% margin of error below, 15 above. Okay, but what you see here is just a representation. It's just that your eyes must be able to figure out that there is a margin for error across this line that you have in here. Okay, so you don't have to touch the line, you just have to get closer to it, and there is still a margin for error. Okay, let me just show it to you so you will see it clearly. Let me just use a horizontal line exactly at the level. Okay, so this is going to be our reference for this third range boundary level. Okay, now let's go into the lower time frame chart and you'll see. Okay, the context box associated with it is this. Okay, 5% above, 15 below. Okay, but the line you've seen on the higher time frame was this level, 290, and actually you just got to 283 and you were into the context. Okay, so no big deal. That's a really interesting question. It's just something I haven't actually thought about talking about, but whoa, boys, if there is a third range boundary, if you don't see it, then we have a problem. There is definitely a third range boundary in here, no questions allowed. It is just pure and simply a third range boundary. Why the indicator doesn't see it? Jesus, there is one. The algorithm doesn't have to detect everything. It is not perfect. If you're waiting for the algorithmic automatic detection, well, it's not going to detect all of it. Okay, no problems. All right, so the other things we were looking at, GT, that was Goodyear, yeah. Okay, Goodyear daily reference charts, same thing again. Oh, nice bear trend. Okay, let's write it. Okay, nice bear trend, this is where the breakout occurs. Why the fuck isn't that highlighted? Oh, it's because we've got to close real... Oh no, it's because it's gone real long to break. Okay, but this is the trend breakout. All right, so trend, reversed context, third range boundary, everyone's agreed? Blue one, and this one is an easy one, so. Okay, it got validated, so blue one. All right, 1-to-1 ratio, will rebounds, third range boundary, okay. All right, new lows. I wouldn't consider this as a new low. We just printed one candle below, so if you want to place the third range boundary there, it's okay for me. I would put it down there because this is where market would have priced it. Okay, there we make new lows, reverse, bam, once again. Okay, this one's definitely fucking black. Okay, lower, reversed, reverse the context. So in here one, but on the context. I'm going fast on this one. If you have questions, you let me know. Okay, this one, oh geez, 1-to-1 ratio as well. Okay, so we squeeze that one. So this one would be plotted in here, 50% of the bear run. Remember, so we put it halfway through. That would have helped us short selling this motherfucking top, but I'll tell you about that later. Okay, so squeezed. You don't know where it has squeezed, so put it halfway through the top and bottom. Okay, same thing in here. 50% through it would be here. Okay, all right, trend channels reversed. Oh, finally. Okay, finally we've got a green fucking one. Okay, I wanted to have at least one today. Okay, here's a green one. Why? Oh, come on. Let me just go into the lower time frame. You'll see it clearly. No, it's not because of the reverse of the context. This is the lagging pattern of the indicator. Remember, the market goes from the recent bottom right back to the resistant context without reversing it. It still remains bearish, okay? It fails to make a new low point, okay? But it goes at least below 50% context, which it did in here. And then, in a second stage, without making 61%, without getting into the opposite context, we then reverse back again to the upside, break the previous high point, and then reverse the context. So in that perspective, we've got the two sets of waves. It's just that the indicator has gone too slow in here, but you really have done your third range boundary already, okay? So when you get your context reversed, which is going to be there, I guess, or there, you should, oh, that's weird actually. Yeah, this one still is a lagging one, but that would be, you put your alert down there, you would have bought into this resistance, into this support context. Did you get the 61%? Yes, you did. You were right at 61, just the context was too laggy. Okay, so this is a lagging one. Normally in here, the context should have adjusted faster. It just didn't. Actually, just give me a second. I think the new version of the indicator has an update on this. Let me just... I try to compensate for lag. Yeah, we'll give it a look. Just give me a second. I'm trying to figure out. Jesus, that's so long to plot. Faster. Okay, my bad. Not on this situation. Even the new version didn't cut it. Okay, so still, that's a lagging third range boundary. Definitely have to figure this one out. Okay, and then higher time frame, and I bet we're going to reverse the context in here as well. Okay. No, context reversed, and we're real time. Okay, so this one hasn't yet given us the third range boundary on the context, so we would be waiting for this market to test it, okay? Okay, are we all agreed on this one? I made it a bit fast, but this is the way to do it. We're 1 hour long into the record, so I'm just going to take the question from Hugo, and then we'll stop it for today. I don't want these things to go too long. Okay, here's the question. This is my range boundary marking from yesterday on Bitcoin 4-hour chart. I invalidated the red third range boundary. Exactly. And assume we're going to have a new one because it barely crossed 50% fibs, so I never traded the red one. Is this a wrong analysis? No, it's not. It's exactly the same type of things that we've seen earlier today. You have the rare specific cases in which you got a bearish third range boundary first, followed by a neutral one. But this one still no signals, if my memory is right, but could turn out to validate sooner rather than later. Okay. But this is the specific case in which we have that. So until we make new lows, there is a risk for a neutral third range boundary to plot. And clap, clap, that's exactly what I highlighted into the weekly briefing. That despite a major catalyst to break this, we would probably create a neutral third range boundary after a bearish one. So it's still pending as we speak, but I suspect Bitcoin to reverse later today. And if it does, then we'll have a neutral third range boundary after a bearish one, and that is just yet another sign that this market isn't bearish, reversing anytime soon, but just bullish trending on the higher time frame. Okay, we had a bearish opportunity, no one sees the opportunity, everyone's pieced out, and we wait for market prices to rise. Okay, in here I think the smart money might be risk limiting a pullback into the lower areas of this range to buy exactly what I forecasted in the weekly update. We'll see, of course, that doesn't mean this is going to happen, just means this was the plan, to go for a neutral third range boundary and to fail out there. Okay, anyone else have a question? Otherwise, we're going to stick with this 1 hour long session today. What happens if we squeeze a third range boundary but fail to reach the 1-to-1 ratio? Okay, so I think you're mixing two things. So the first one is a squeezed third range boundary is basically a pattern in which you should have a third range boundary and you just do not. Means the market doesn't even react or just goes straight line beyond, or the market makes a real quick make a real quick reaction, like something like up and down, and bam, goes beyond. Okay, so you see an early reaction that is not suitable enough, but then the market reverses. That will be the squeezed third range boundary. In that perspective, if you can see the level in which the third range boundary should have been, you need to reach out to the 1-to-1 ratio in order to put it into the black color. Does that sound better that way? To put it black, you either have to go in a straight line through the levels, just like nothing ever happened out there, or you see an early price reaction, and then, if you can figure out that level, must be at least 61% and so on, okay? Must be an area in which you see early reaction, but just not enough of a reaction, and then the market violently breaks. Then in that perspective, you cannot put it into black, at least until it reached out the 1-to-1 ratio. Okay? And anyway, it's just a matter of ruling these things, okay? The nature of this third range boundary anyway, even if you don't turn it to black, still remains the fact that you had a third range boundary and you fucked it up. It's just that when we'll get to the experience context, okay, the hardest possible stuff I'll teach you, that will make a difference. Until then, it doesn't even change anything for you guys. It's just a matter of terminology, of naming stuff. Because the naming, whether you go for the black one or the blue one, for you guys in the beginning of the strategy, well, that doesn't nearly change anything. Most of the time, these trend third range boundary, you're not going to trade them. Okay? And if you trade them, it's just to fuck up your impatience and uncertainty biases. Okay? You're not going to make money out of these things because we have a bear trend. I teach you third range boundaries so you can profit from them in a trend follow opportunity later on. But first, I want you guys to destroy the fear of uncertainty and so on, which means you must be comfortable with trading inside ranges, looking at prices inside ranges. Okay? Don't try to make money with the third range boundary. You simply won't. But you need to get familiar with them. Place them correctly, trade them without fear when you have signals, and most importantly, getting familiar with the context inside ranges. When you would have traded ranges correctly, you would be far safer to trade trends. All right? And even if you mix up with between the blue ones and the black ones because you forgot about the rules or something, well, don't get me wrong, it's really not that big of a deal. It's really for later perspectives of using those third range boundary into expert levels that this will make a difference. This is the best range boundary for making money is the 4th if you get the right timing. Yes, but that also depends on what the third range boundary is. That's the reason why I teach you the third range boundary first, because it destroys the most despicable biases you have that would just kill you if you do not. And, Who's that? Sorry, Seniac. And most importantly, the third range boundary helps us defining which type of fourth range boundary are we going to buy, because if the third range boundary is a bearish one, then we're going to buy the fourth one below the second one. That makes hell of a difference, actually. Okay, the third range boundary is of course usable in here as trend follow. If we break a third range boundary, that means the market is still trending, and so on. The squeezed ones are the one we're going to buy back when the market retraces to the 50% level, and so on. We use these motherfuckers a lot. You just don't know yet what to. Okay? You'll get the ending picture and the broader picture of it sooner or later. Just don't try to rush to it. Okay? First of all, place them correctly. Learn how to trade them safely when the signals are there, so you get familiar with this context, but don't try to make yourself a rich person with the third range boundaries. That's not the point. But if you don't trade them, you don't destroy the fear of uncertainty biases, because you have to work yourself around just taking a trade in a chaotic market. Even though this trade will not turn you as a rich person, that is very, very important still to trade them. Most importantly, because when you're going to actively put your money into a third range boundary, you're going to make a shitload of mistake not looking at the signals properly and all of those things. And I want you guys to do it. It's not complicated to truly well navigate a third range boundary. Most of the time, you're going to be out at break even, or you're going to take no loss, or you're going to take just a tiny gain. But third range boundaries are most important if you trade them correctly, and if you have made the mistakes of plotting these with real market and real money. Because doing it like that in a replay and stuff like that, it's easy, guys. You're going to easily do it. It's going to take 2 to 3 weeks, up to a month to eventually do it well. You'll see when you get to trade it, it's not going to be the same. Real-time market is going to fuck up your mindset, and putting your money at stake is going to make you fucking trading against them, which means you're going to refuse stop taking and all of those things that all of the noobs are doing at least once. So you will have to do it as well. No big deal. Making mistakes is part of the process. Actual PA, we can consider PA as an asset. I'll take that last question and then I'll go. I don't want this to last too long. Oh, on Bitcoin. Okay, Bitcoin, you said. Actual PA, we consider shift on third range boundary on upper time frame. Okay, no, not now. We're still with the 4-hour chart reference. Oh, actually 1 hour. Okay, let's go 1 hour. But this is why I like you guys to plot the third range boundaries on the trend channel, because you can still have a look at the context in here really easily. I personally have the higher time frame context highlighted because I work on 3 time frames, okay? But it's easier for you to do it with the trend channel, because with the trend channel, what you basically guys do is that you see that the context is still bullish. So in here, you know that the third range boundary is on the trend channel's time frame. Oh, and by the way, what's going to happen if we do this on Bitcoin? Is it going to be the third? No, we will have our first third range boundary in here. Okay, very great example actually. We're going to do it because this one really is the kind of fucked up thing you're going to come over with. Okay, so we got the first third range boundary in here. Let's assume that we do this. Okay, though we'll have the specific case in which we have 2 third range boundaries, the first one being bearish, the second one later on being neutral, okay? But don't you see another pattern in here? If you guys see this one, that's real great. Yeah, we'll reverse the context on the higher time frame, but still. I want a very precise answer in here. If you see that thing, then you're real good with that. If you don't see it, no big deal. Okay, what happens if we break this rising context and the previous low point? Nope. No one's seeing this one. Okay, try it out. No worries. Just spit it out. Just say whatever comes to mind. Eventually someone will catch the right answer. Overlap. No, it's not. It's really third range boundary related. Okay. I'll let the last one give me its answer. If we break the second range boundary, no. Okay, so here's the answer. Now, do you see why? Yes, exactly. Because we've gone right down there, getting real closer to the trend channel, or to the context, okay? We are closing up with the context, rebouncing significantly, going on top of the 50% context multiple times, okay? And then, in a second stage, we break the second range boundary and we reverse the context. That is the delayed pattern. So in this perspective, I really hope that if this is what's going to happen, okay, I doubt it. I don't think we're going to do such a thing. But if we do it, then you will have to figure out that we are now neutralizing the fucker, the Bitcoin, for larger time frames, okay? That's also the reason why I told you that the market has to be bought out there, because if it isn't, then we're probably going to go below 40K, nearly 100% chances. Okay? The market must not break the context and break below the second range boundary, otherwise the fourth range boundary will be a bear context. Okay? I know this one is a bit tricky, because, of course, I don't want you guys to anticipate these things now. But that's the reason why I put you into a tricky corner, telling you, let's assume that the market does that, though it's breaking this thing and it's making new lows. In that perspective, when the market does that, you must be able to figure out that, bam, you had to do something with the previous market top. You have to replace the third range boundary. Of course, if you don't do it, it's no big deal. It's not going to change anything to your trading activity. But for those who are trend following this asset, or for those who are looking for reverse counter trend trades, no, it's not reverse, it's just a counter trend divergence pattern. If this breaks there, then I can tell you for sure that the divergence has validated. Okay? So this will change the thing, putting the current consolidative context into a higher time frames reference. All right, I'm taking no other questions, guys. So 1 hour and 20 minutes, more than enough. I hope you've learned a few valuable stuff. And we'll try settling for the same time scale 1 week from now. And keep it that way. So I'll get the replay uploaded and should be available in less than 20-25 minutes, I guess, the time for YouTube to convert. And then I'll upload it into Discord. Okay, so if someone asks for a replay, you tell them that there's one. I'll put it into, where am I going to put it? Oh, god damn it. I'm going to put it into educational content. I think that's where it's supposed to be. Yeah, so in educational content, for 7 days. And next week we're gonna get to another recording session, and I will delete this one to avoid piling up on those 1 hour long videos. I just don't want too much video time uploaded into YouTube. Okay, bye guys.